बोला ये।
Edit.
Amrita Vishwa Vidyapeetham is one of India's premier top-ranked universities which focuses on transforming lives through learning, research and innovation. The university was established 19 years ago in the year 2003 and has made significant achievements in a short time. Education for life, education for living. Amrita University is guided by the thoughtfulness of our Chancellor, Amma, who laid down the philosophy of education for life by placing equal stress on education for a living. It is this vision that led to the establishment of a vast network of educational institutions that provide modern education while imparting the traditional values. While the pursuit of academic excellence forms the core of Amrita's success, it also undertakes the responsibility to shape the whole character of youngsters with love, care, and compassion. The university is headquartered at the foothills of the Western Ghats in Coimbatore, Tamil Nadu, and has 5 other campuses spread across South India in Amrithapuri, Kerala, Kochi, Kerala, Bengaluru, Karnataka, Chennai, Tamil Nadu, and Mysore, Karnataka. The university will soon launch its new campuses in Amravati, Andhra Pradesh, Faridabad, Delhi, NCR. Our inspiration, a renowned humanitarian leader and spiritual leader, Amba is the Chancellor and guiding light of Amrita Vishwa Vidyapeetham. Amma's concept of education, stress on research, and commitment to instilling universal values have come together to shape Amrita into an institution where the latest achievements and discoveries combined with compassion and service-mindedness. As Amma said in 2010, when the State University of New York presented her with an honorary doctorate in humane letters. Rankings. The multi-campus, multidisciplinary research establishment is ranked as 5th best university in India 2021 by National Institutional Ranking Framework, NIRF. We have also been accorded the status of Institute of Eminence, IOE, by the Ministry of Education, Government of India. A testament to our pursuit of excellence is the NAC A++ accreditation score, the highest possible. NAC accreditation measures universities for excellence in curricular aspects, teaching, learning and evaluation, research, innovations and extension, infrastructure and learning resources, student support and progression, governance, leadership and management, institutional values and best practices, global impact and international collaborations. Among the private educational institutions in the country, Amrita has entered into MOUs and collaborations with more than 450 leading universities around the globe. Students also benefit from our relations with industries and interactions with top management of multinational companies. These collaborations facilitate student exchange programs, student visits, industrial training, and project guidance under reputed corporate entities. Placements. Placements at Amrita have always been best in class, with students usually having more than 1 job offer. Some students have up to 3 job offers by the end of their course from reputed MNCs, be it engineering, management, life sciences, arts or sciences. Amrita is a place where the world's best companies look for talent. More than 200 companies visit the campus every year, and the average salary offered to our students is 5.8 lakh per annum. Meanwhile, the highest package offered is 56.95 lakh per annum, and the highest stipend for internship is rupees 80,000 per month. Amrita's Technology Business Incubator, TBI, is a non-profit supported by the Government of India that funds, mentors, and nurtures ideas by startups and entrepreneurs. It focuses on developing innovations in the areas of information technology, cybersecurity, networking, social media, and more. The TBI startups have obtained multiple awards and recognition, both from India and across the globe. Till date, TBI has incubated more than 75 startups and mentored 216 startup ideas with 0% loss from investments. It funds up to 1 crore rupees per startup and has opened up many more funding options through its partnership with venture capital firms and angel investor networks. Amrita TBI is one of the only 6 incubators selected to be world-class under Niti Aayog's Atal Innovation Mission. Campus life, a home away from home. At Amrita, we believe in a holistic approach towards our students' development. To augment students' classroom learning, all campuses provide students with digital and central libraries, quiet study centers, seminar halls, e-learning studios, computer labs, and campus-wide free Wi-Fi. The university encourages both indoor and outdoor sports and games, and there are world-class swimming pools, gymnasiums, stadiums, and games arenas. Various clubs cater to the artistic and scientific minds of the students.
Good evening, everyone. Welcome to yet another edition of the Great Amrita Alumni Conclave, a full-fledged virtual webinar series organized by the Directorate of Admissions and spearheaded by the shining alumni of Amrita. My name is Gopi Krishnan. Being an alumnus of Amrita School of Business, Amritapuri campus, and being part of the Corporate and Industrial Relations Department of Amrita Vishwavidyapeetham, it is indeed an honor and a pleasure for me to be a part of the new edition of the Great Amrita Alumni Conclave. Today, we have with us Mr. Shakti Prasad, the Senior Vice President of Axio Finance. Shakti and I were classmates in MBA back in 2011 and have been a great friends ever since. Speaking about his career, Shakti started his career with Bajaj Finserv, a synonym for lending in India, and he held various strategic positions in Bajaj Finserv during his period. After his 9 years of stint with Bajaj, he joined Axio Finance as a Senior Vice President. I welcome Mr. Shakti Prasad to the new edition of the Great Amrita Alumni Conclave. Welcome, Shakti.
Hey, thanks, Gopi. Thank you so much. Good evening, and it's a pleasure to have this chat with you. Sorry. Before that, I just want to have a technical question. You can hear me and the video is visible, right?
Yeah, I can hear you well.
Sure, great.
Yeah. So, Shakti, it's a pleasure to have a chat with you in a formal setup, and I'm curious to know how you feel when you look back to our MBA days at Amrita today.
Yeah, again, that's a very nostalgic question, but then, yeah, it's always a pleasure to have this chat with this Amrita fraternity or Amrita family. That's how I used to call it, and I love to call it, because Amrita was and will always remain a special a place in my heart for not just the reason for the education that I've had from there, but also for multiple other reasons. Like even just before the meeting which we had, I was going through a video which was played by the team on how Amrita focuses on not just on the education for life, but a larger course of education for living. So that's a great learning or a great bookmark that lives on every student that leave the campus from Amrita. And moreover, before we get into the business, what we are going to discuss today, I would like to thank my beloved Amma and our old beloved Amma for her immense blessing and guidance in my personal life, and also for all the things that she's been doing as a wonderful leader for Amrita family and Amrita University as such. So yeah, it's a pleasure, and looking forward to have this chat with you and all the people who are present in this group, the students and the faculties who are there. I'm so glad to be part of this group. Thank you.
Yeah, thanks again, Shakti. I strongly feel like with 10 plus years of experience in the lending industry, you're the right person we can have today to discuss consumer credit, the challenges, opportunities, and much more.
Yeah, sure. See, again, it's a very vast topic. Definitely, I'm more than happy to share my bits of thoughts around this space, whatever I've learned from Bajaj or what I've learned in the new company I'm working with. I'm looking forward to have this chat with you.
Yeah. So Shakti, let's begin. So in simple understanding, consumer credit is often referred to as a consumer debt, the debt that a consumer takes to buy goods and services. So this is what we understand from a borrower's perspective. So is it just this, or is there anything more to it from a lender's perspective?
Yeah, you well put it. See, that's the best way a person can put it. But the word debt as such, when you hear it, right, it's kind of alarming for anybody for that matter. Knowing it or unknowingly kind of triggers some kind of alarm in our head. But if you think in your daily life, right, we are all inducted or have a credit with someone or the other. It could be like saying, hey, I'll pay you tomorrow to the newspaper guy, to as complex as something like buying a home loan. So it's not something which even we might say I don't take loans in my life, but credit is a part of human life from the time we are all born, and it's part of a life not just for the reason that it was invented recently. It's an old phenomenon that it has been in the industry from the time of the Roman Empire, from the time when we used to barter between spices, where there was no formal currency with us. Credit was always there. It was in one form or the other. People used to exchange credit in the economy. To give you a basic example, even the kata system that we have with our kirana stores is a very informal form of lending or a credit. Like we go buy things, say for 30 days, or mothers or our parents would go there and buy things for 30 days. We'd say that, hey, can you keep a tab for me? And then the person would write it down for 30 days or 20 days or whatever it is. At the end of the month, they would go and pay. This is actually a credit, and this credit is built on the trust between the two parties, which is our parents and the shopkeeper. So that's an informal way of doing it. But when you put it in a very formal setup today, we call it very dearly as an EMI. EMI, which very translated to something as equated monthly installment, but nobody thinks about the complexity of that name. But EMI is a sweet name that we have for this into the system. So like right from the Roman Empire time, where where you used to trade, to our parents who used on a daily basis, we have reached to a place where you just click of a button, you can get a line of credit on your phone, sitting at the comfort of your home. So that's where the lending has been in these days.
Yeah. So Shakti, adding to it, if you take a look at a decade back, lending was an activity performed by banks and NBFCs. So now it has been incorporated as an offering on e-commerce platform widely. For example, I use Amazon Pay Later extensively whenever I make a purchase on Amazon. So how do you see this transformation of lending on e-commerce platforms? Or what are the opportunities and challenges faced by new age lending firms? Because I feel like you are someone who can answer this question, because Axio is also an established player in the market. So how do you see this?
Yeah, so even before I get to the answer, I want to thank you for being my customer, because knowing you and only you are my customer. Why? Because Amazon Pay Later is
You're referring to Amazon Pay? You're referring to Amazon Pay Later?
Yeah. So Amazon Pay Later, see, that's a typical example of how powerful the digital lending is today. You've been a customer of Amazon. You've been using Amazon for a long time, and you use Amazon Pay Later. But you used it for the purpose of convenience. But end of the day, you are also part of the formal credit system. That's how powerful, and that's how the new age fintech companies are able to become the formal part of the credit system. But because what used to happen before was that there were a set of banks who used to give credit, and that's how it was. But with the new age fintech companies being in the platform, what is the problem they're trying to solve? Is that one, most importantly, giving credit or a line of amount to a certain set of customers who are usually not serviced by this traditional lenders. Typically, these loans are very small ticket size loans. They would range it from $2,000 to maybe $10,000, which is like very transactional for a particular specific use cases. And the largest population that's unserved is the SMEs. So when I say the SMEs could be someone who makes who's a small restaurant owner or maybe an Uber driver. The Uber driver is a self-employed person by himself. He or she would be earning a lot of amount of money, but then there's no formal way to recognize that money because there's no salary statement or there's no proof of income that happens. So these are the set of population of customers that this kind of new age fintech companies are trying to solve for. And an interesting let me not get too technical here, why? Because of I really don't want to make this complex discussion. So let me put a very simple term called embedded finance. Embedded finance is like something which which is part, like what you said, like Gopi was using Amazon Pay later without even knowing that there's a lender behind it. But that's the convenience that we brought to you as a customer. But at the same time, we're also bringing the same thing, right? Which is to the end merchants. Also, merchant in this case could be an Amazon or any other player. So let me give you a broader example. Say, like, how do you bifurcate it? Say you or maybe another person. Say me. We would never wake up a morning and say that, hey, can I take a home? I want to take a home loan. You would never do that, or you'll not say, hey, I want to take a car loan. Rather, your idea would be, hey, I want to buy a good car, or I want to buy a good home, or maybe I want to buy a good mobile phone. That's the thought. So what we're doing, or what the lenders are doing, is not propagating a loan. It's more like propagating a purchase or enhancing a purchase experience. That's what the lenders are doing to the end customers by providing convenience, affordability, helping them to purchase a better thing. At the same time, it also helps the merchants. Like merchants, on the contrary, for example, if a person walk into a store, he or she might be willing to buy a say Oppo phone for that matter. Nothing against Oppo, but then Oppo is a very basic smartphone device. So he might or she might be wanting to buy say a phone worth of say 5,000, 6,000 rupees. That's the budget that he's got for the month. So, but the same customer might have an aspiration to buy an iPhone or a OnePlus, which is priced much higher. But he or she might not think because of that, because he or she might be having a budget of say 5,000 for that particular month. So the shopkeeper or the merchant, what they or she would be doing is that, hey, why don't you buy an iPhone or a OnePlus phone by spending just the same 5,000, but you can just split that 5,000 into say 10 months. You can the 10 months is basically $60,000, so he can convert that into EMI. So that's where the whole party comes into this. The merchant will help the customer to fulfill his dream. We help the merchant and the customer by providing the lending infrastructure in between. And this kind of create the entire jolt of the customer getting the same experience what we all see in this today's world.
So, Shakti, I understand what you're saying. It's like a win-win situation for the customer as well as the merchant. But I just have a question. Like, here, like, are the lenders trying to make the customer spend beyond their capacity? So, don't you think it's a trap for the customers in the future? For example, like if anything happens in the future, let's say the customer loses his job and he doesn't have any means to pay back the amount. So, don't you think it's a trap for the customer? And he knows that his capacity is to go with an Oppo phone, which is maybe 15,000 or 20,000, but giving him more capacity to go for the iPhone. But if something goes wrong, how do you like convince the customers?
Yeah, I get that. I could predict this question. Why? Because there's something which every lender or every person who pioneers lending or affordability kind of hears this over and over again. Before I get into my way of putting it straight, let me again caution everybody on this call: not just credit, any offering in this world should be used wisely. So it's not just credit or anything for that matter. If you use it wisely, definitely that's a tool for you. So being a strong flag bearer for the affordability, what I believe is that it's not about triggering an unwanted purchase. It's about building the gap in your affordability to your affinity or the affinity that you have. The same customer, the same example that we spoke before, when the customer is walking into the store, it's obvious that being a human being, we all have that aspirational thought. When you're sitting on when you're having a small normal phone, you would want to upgrade to a digital phone, and a digital phone to a phone with a better camera, with a single camera to a camera with three cameras, with four cameras. That's how human brain works. So it's all about the affinity, or you bridging that needs to the affinity. So what the lenders bring onto the table is the convenience. And how do we bring that convenience? Convenience is not just a matter of just anybody walking into the store, you just give the amount to the customer. So that doesn't happen like that. So it's more about how to massage the offer in a better way for the customer. So again, to the example which we spoke before, India is a very price sensitive market. So being a lender, we should ensure that, or the everybody in the market knows that if you offer something, say even $500 lesser than what it is supposed to be offered, there's a lot of word that goes there. So affordability is a proxy for this price sensitivity. So rather than iPhone or OnePlus going and giving a discount to a customer, or giving a lot of deep pocket discount, what they would think is that, hey, why don't I help the customer to buy it in a better way rather than giving a discount? So that is the trade-off that we kind of provide to the customer. That's one of the things. Second, and the most important part, is the affordability offering to the customer. Say if the customer is walking into the store and he or she is getting the mobile phone with a high interest rate, what would happen is that that's a scenario where you end up having an adverse selective customer. Say you or me or anybody for that matter, we would not go to a mobile phone store and buy a phone with, say, interest rate of, say, higher up to 24%. That's like pure dumb thing to do. You would not pay an interest, or it's an obvious stupid thing to do. So you would always think twice about should I do it? But there are customers who doesn't even think about it, and that's the customers who a lender would not want to do that. So how do we bring in that affordability? That's the most important thing. Like the lenders work with the manufacturers, or in case the manufacturer is Oppo, or let's get out of this boring example of Oppo. It could be education sector. So, for example, say you or for a me or anybody in this call want to upgrade yourself to, say, you want to learn for artificial intelligence course from Udemy, or say from Upgrad campus or Upgrad. We also offer that kind of education loans for that. It's not called education loans; it's more of an ed tech. So it's the new term there. So that kind of loan. So what happens is that in that case, the loan is offered to the service provider, which is the Upgrad. We work with Amrita to ensure that we give a special kind of offering to the end customer. So if you say the course is for 80,000, you pay 10,000 per month rather than paying 10,000 plus an interest. That would help the customer to purchase or avail a course with the budget that he or she has. So maybe that customer would be a person who recently graduated from an engineering college, and he or she needs to upgrade his skill or upgrade her skills. That could be one of the ways to do that. And the most important thing, how we solve for this, is the customization of offers. Why? Because every single customer has got their own different set of needs. It could be as simple as we have a scheme called no down payment schemes.
So are you saying you have customization option with the EMIs as well?
Yeah. So it's something like again, it's all sticking to the problem of, like, are we pushing the customer, or are we giving him convenience? So it's rather than pushing the customer, it's pushing the customer is like, you walk into the store, I'll give you 9-month EMI option, you pay, you want, or else you leave. That's how it becomes a push. But when you give a plethora of it's a plethora of offers, like you give him you were saying something.
So you're saying it's a range of EMIs that the customer can
so you give a range of options to the customer. You say you can pay us in 9 EMIs by giving 2 down payments, so that when that customer give a down payment, that the customer's intensities are much higher. He want to actually avail the product. So that's one way of doing it. Or you say that, okay, you don't have money to pay the down payment. That's okay. You do something, rather than 9 months, you pay me in 18 months, so that your monthly outflow becomes lower. So these are the kind of customization that gets offered. So overall, it's an important factor that we have to understand. It's not just the it's not just we're trying to pull the customer, but on an overall aspect, we're trying to solve the credit problem, not just for a single set of customer, but as a larger set of customer across the country. So that's one of the key things. Again, I want to emphasize here, because Most of the traditional lenders would be doing it in a certain pockets, but what the larger fintechs would do is that across the country, across all the pin codes of the country, we would be serving that problem.
Yeah, Shakti, I can say that it is true because you know that I moved to Amrita a year back, and so let me tell you that it was surprised to me to see that even in the rural market, people adapted to the idea of buy now, pay later options, etc. So this is something that that what you're doing is true. It's already there in the rural market as well.
Okay. I mean, thanks for validating that again. I'm not surprised for one single reason that that's one of the key spots or the areas where we grow very rapidly. Thanks for the legendary banks for this. Why? Because most of the banks or the legendary lenders are kind of shy away from giving large credit or credit cards over and above the 32 tier markets in the country. So the potential is so immense. To give again, if you walk down from your campus and walk down to the streets there in Amritsar, you definitely can see a lot of people who would have an LG or a Sony Samsung panel in their home or would be using an iPhone. So the aspiration that is there in our country is as good as what happens in a tier 3 or a rural market versus what happens in an urban market. Definitely, there's a lot of difference in the lifestyle or the way that people earn income, but the aspiration kind of remains the same. So what we try to solve is that how do we reach out to this market? How do we look at this market differently? And how do we solve the credit problems in this industry?
Yeah, that's true. I think the consumerism has increased in both urban as well as the rural area of the country. And recently, I read a report stating that in a month, there are 22 million people are applying for new credit cards and loans, and that is an aspirational story for, especially in a lender's perspective, right? So, Shakti, one more question. So what do you think the lenders need to do differently in such markets compared to the urban market?
So yeah, again, the overarching thing about any lending is that you have to, it's about understanding who the end customer is. But the differentiator, what the banks were not able to do or banks were not willing to do versus what the new age lenders are doing is that it's just about understanding or creating that trust in the market. So again, trust is always a factor of cost. It's not just in lending; it's in the human relationships and every aspect of our life. Trust is always proportionate to the kind of risk that we want to take in our life. So that's the biggest thumb rule of any new age digital lender. What we do is that we kind of try to place that kind of trust in the system. It might not be as big as giving a home loan or maybe giving a 50,000 credit line to a customer from that part of the segment, but it starts with giving a smaller loan. And the larger part of it is about how to customize these offer for this kind of markets. One of the most important thing is creating a collection infrastructure for this market. Can I just loop it back to the trust? How do we look at it? To give an interesting anecdote, when you stay in an urban city, say like Bangalore, I don't even know who's the neighbor next door. I mean, that could be the scenario with a whole lot of people because we are very busy. We're so urbanized that we don't even know the neighbors across us, across our floor or maybe the next door. On the contrary, if you go to a tier 3 or a rural market, the biggest differentiator is that a single person would know almost everybody in the lane or maybe across the village. If you go to a tea stall and ask for a person, that guy would know at least 50 houses around his tea stall. He would be able to, pinpoint the address and the place. So that's the kind of, the differentiator and the trust of the infrastructure that is there. So the urban market, the thought and the process of collecting the money back is very different in a rural market or a tier 3 market. So you don't have to do the door-to-door knocking that what we have in urban market. You just have to go ask someone, hey, do you know XYZ? And then he or she would be able to do that. So and because of that, the people also feel it very sensitive that nobody should go and ask my neighbor. They would make a payment much proactively, and it's very interesting if you see from a data perspective also that these kind of markets repay much better than the the urban market. And the larger part of it is also about the vernacular language part of it. So most of the lenders don't invest on the language infrastructure, which is also very important when you have to reach out to these kind of population. So even if there is a willingness to pay, maybe customers don't know how to make a payment, and you send him an English SMS reminder saying that he click here to do that with the English UI, the customer might not end up making the payment. So there's a lot of investment investment that needs to go on vernacular reach out, and also the collective infrastructure needs to be different. These are the, and mostly these are all bundled with the trust factor that I told before, is how we kind of solve this biggest problem in the tier 3 markets.
Yeah. So, okay, Shakti, now I have an idea how consumer lending is solving problems in the economy. But I strongly suggest to all the listeners of this session to use their credit wisely. So, Shakti, I understand the consumer credit is based on trust in the customer. So, what is the process in the digital era for identifying the potential borrower and ensuring the repayments?
Yeah, so like I was pondering in my previous answer too, right? The uber objective of digital lending, or the lending that used to happen, say 10 years ago or 100 years ago or 1,000 years ago, is very simple. The money needs to come back to the person who's lending the money. Uh, in a very basic scenario, even if I am giving 1,000 rupees to you or any of my other friends, I would definitely think twice. One, can he give the money back to me, which is called the ability to pay the money back? And will he give the money back to me, which is most importantly, is he willing to pay the money back? So the pillar of every lending process is called the willingness to pay and the ability to pay. Willingness to pay is to do a lot of with the behavioral aspect of a customer, whether he's a willful defaulter or he or she has the habit of forgetting the bills or not making the payment on time. These are the things that could be gauged by the behavioral patterns of a customer.
You're talking
On the
about
second hand, there's something called ability to pay. Sorry?
So are you talking about the credit history?
Yeah. So credit history again is part more from an ability to pay. And credit history definitely, as you rightly said, it gives a more of a holistic view of both the thing from a history perspective. So if I have to do from a, if I have to just speak a little bit more about how do we look into this, right? Am I audible, Rupi? I think there's some. Hello. Gopi, can you just say thumbs up if you can hear me?
Yeah, I can hear you. Yeah.
Oh, all right. Yeah. Great. So let me just dig dig a little deeper into this aspect of two major pillars of how the lending happens, which is the willingness to pay and ability. I'm not getting technical into it, but the larger part of behavioral as well as ability is all driven by the data. So again, data is the most important asset of any lender these days. So how do we see the data? Data is collected in two different forms. One is the imputed data. By imputed data is any data that is imputed by the customer. It could be customer's name, mobile number, whatever he inputs as such into the system. Second, it could be as simple as behavioral data, like what time of the day he's applying for the loan, how many attempts he's making on the loan, from where is he applying, is it from a mobile device or a laptop or a tab or things like that. And it could also be as simple as like what platform did he come from? Did he come from an offline channel or an Instagram or a Facebook or maybe a LinkedIn? So definitely a LinkedIn customer would be very, very different from what comes from an Instagram, right? Though we use both, but then the channel would be very different. So these are the data on the lender, and definitely both these data, as you rightly said before, would be clubbed and looked empirically from with the data sources that we get from the credit bureaus. So credit bureaus are someone called someone who's like a Sybil or Equifax or Experian. These are the guys, or these are the platforms which kind of keeps a history. They're like there's a very interesting character in the Hindu mythology called the person who keeps record of our action. I'm just missing the name. It's like the person in the modern age. So the technology would invent everything right from the day one you take a loan. It could as that's why I want everybody in this call to be very cautious about it. It could start right from the education loan that you start taking to any loan till you process the loan from. So this is these are all inputs that goes into the lending system, and that's how the lenders or the banks come with view whether he or she needs to be given with a credit line or not, to maybe to purchase a mobile phone or even to buy a home or a car or whatever it is.
So on a related note, Shakti, we understand that the credit history can determine whether you can get a loan. So the credit scores are built on your credit history and determine how much you pay to borrow money for your needs. So yet many people don't know where to start when it comes to building or improving or protecting their credit history. So what is your advice to young professionals on building and improving the credit history?
Yes. See, again, I love to discuss about this topic. Why? Because credit, though has been a very integral part of the system, like what you've said, the understanding about the credit history or the understanding about the discipline that you need to have the credit in our country is very low. And because of that reason, a lot of investment goes from all the lenders to educate the customers to make them understand the importance of it. Why? Because a single default, maybe knowing or unknowingly, can create a lot of trouble in their lending, the history of lending, what they want to do in future. Even a small default on education loan can impact you taking a home loan or car loan later in your life. So let me just, before I get into the thought of how to improve a credit score, it's more important to understand why is it relevant. Obviously, it's relevant, but why is it relevant? Because the biggest and how is a credit score calculated? So credit score is very basically a three-digit number, which could range from say zero, but absolutely zero is as good as don't exist in this world, and it could go up to triple nine. So a good credit score is something that somewhere around 750 and above, or excellent is something about 800, and a average would be somewhere around 600. Let's not get into the numbers, but this is how it is graded. And a good or an excellent credit score would help you in a lot of different ways. Like to give you a few pointers, it could start from, like, if you're applying for a loan, if you have a high credit score, you could get low interest loan on all type of loan. Could be a personal loan or a car loan, whatever it is. That's something which is very powerful as a consumer that you could have. Second is on the higher chances of approval. Like if you go apply for a loan, usually in the industry, the chances of the loan getting approved versus rejected is, I mean, I don't want to give a number, why, because it depends on what kind of loan you're applying for. But the moment you have a very good credit history, the chances of your loan getting approved is on the higher side. Obviously, along with that, you would get a higher credit limit. So the better credit scores you have, you apply for a home loan or a credit card, you get a better, higher approval rate. And the most important thing is the power of negotiation that you might have in your hand. So, for example, if a telecaller calls you for a personal loan, and then you have a better score on your hand, you could definitely negotiate with that person to get a better, percent rate of interest or a processing fee waiver. Why? Because obviously they know that you're a good customer. You're not going to default any of your payments. So that's a very good, powerful tool that you would have. So these are the benefits that you would definitely possess if you have a good score. But at the
Shakti,
same time, I want to.
yeah,
Sorry,
sorry,
okay.
I was just wondering, Shakti, like, if a person who has never taken a loan, he wouldn't have any credit history, right? So what happens with him?
Yeah, so even before we go there, definitely I want to ponder that point because that's an important point we need to discuss. I want to also capture a very important part of it is that how do you build your credit score? That's a very important thing. I think we need to discuss upon why, because that's again, as good as building this ecosystem, as it's as important for me to propagate this thought for young professionals who are on this call and aspirants also. So one important thing is to ensure that you are very consistent with your repayments. If you these are a very obvious thing, but then people don't kind of realize it, because if you take money from someone, or if you take money from your friend, or your even for that matter from a bank, it's very obvious that you need to make the repayment. But with a friend, you can say, "Hey, dude, I can give you after 2 days or 3 days." But with a bank, you can't. You can do that. You have an option to do that. But if you do that, that will impact your credit score. So the weightage of this is the largest weightage of somewhere around 35% of the overall score weightage is on your consistency of repayment. So the moment you default one of your payments, it's going to impact your credit score very badly. So it should be very much ingrained in your head right from this young age that credit score is very important, and one of the key metrics for credit score is consistent repayment of the loan. The second important factor is the credit utilization. So always the banks would be looking out for people, who's hungry for credit. Definitely, that's how they make money. But at the same time, they also want to ensure that how do they customers, how do customers make, uh, are they using it more than what it's required for? Like the question what Gopi was asking, are they spending beyond their means? A very simple example to give you is that banks or credit card companies always, want to make you use more and more of their money, but it's also a proxy they're putting to ensure that are you spending more than that. So you should also ensure that you use a limit as per your requirement and don't exhaust the limit whatever they're given to you. That's another thing which is there. And most importantly, what would happen is that when people go desperate about credit, like they start applying to like 5, 6 banks at a time. That's a very big alarm that could go on your credit score. Why? Because if you want to apply for a loan, apply with an institution. Don't go with a DSA or a person in between, because that person would take your document, give it to 5 different banks. All the 5 banks would put your name on the bureau. That will again, create an imbalance in your credit score. So always apply to a single bank. Try to get approval from there. If you're not getting an approval from there, try to understand why did you get an approval. If it's an obvious reason that you're not getting approval, then don't even try. Try to improve your credit score later and then go back there. But in case you know that, okay, maybe the policy of this bank is bad, then you can go to another bank, but never apply simultaneously for 5, 6 banks at the same time.
So,
And most importantly, sorry.
Yeah, I do have one more question. Like, the credit score measurement nowadays make many ineligible for loans. So do you see any changes in credit score measurements in the coming years? Like, since you are talking about the credit scores.
Yeah, so credit score is the way at which the credit score is measured would always remain the same. It's pretty traditional. Why? Because it's not just used by fintechs, it's used by large banks, it's used by corporate debt providers. So it's a large mechanism that the entire lending body, right from the corporate debt providers to the fintechs to the banks, have created over 25 years, and it would remain the same. But definitely the way that people look into it would change. So to give an example with the score, what we said before, a bank would not even talk to a customer who's below 720 civil score versus a lender like Axio or a lender like Zest Money would try to find an alternate data through which this customer could be underwritten, say between 720 to 670 is a score range which we also want to try. Because we know that maybe he or she would have defaulted 2, 3 payments in the previous tenure of the loans, but there could be different ways at which maybe people can be, working around it. So again, for example, there are, to answer your question, there would be young professionals who would have taken a loan at a very young age and would have defaulted at the loans at the age of 25. How could they correct it? So one typical example how you could correct is that it could usually be an education loan or credit card or something like that. So try to talk to your lender. Try to talk to your lender and figure out like what exactly is the outstanding amount. Try to bring that, for example, if it's a 1 lakh outstanding, whatever it is, try to get an extension of your EMI period. Say if it's a 12-month EMI, try to get it for 24 months or something, which shows that you're willing to make the payment so that your monthly outcome would get lower, and try to make it in smaller buckets and try to repay the loan as soon as possible, as fast as possible in your capacity. That's one of the things. Second is once you should always keep looking at your bureau score, which is very free across the apps you have. Not very frequently, also don't do that, but frequently. That's the second way of doing it. And most importantly, the credit score is also an algorithm. It's not something, it's not something who will hold a personal grudge against you. So if you do good things, it always become better. So if you start building your score by taking a smaller loans or talking to the lender, most of the people, what happens is that the moment they know they can't make the repayment, they try to stay away from the lender. They don't talk to them. They don't pick up the call from the lender. They become rude to the system. That's where your score get impacted even worse. Rather than that, it's better to have a chat with them to understand, can I restructure the loan? Can I increase my tenor or stuff like that, and work on improving the score. And the most important part of all these things is the usage of credit card. We all have a credit card, and the biggest trap that we all fall for is something called revolving credit. Like there's a big bold letter that comes in a statement which says that you can use it for minimum use, and we end up using that for minimum use, and that's also a very huge red flag for a lender. So don't fall for that trap too. So these are the combined thing I personally feel, and also want to let you and the people who are on this call know that try to use the credit facility wisely, so that as a system and as an individual you can benefit much better out of it.
Right. So thank you, Shakti. So I have an interesting question now. How safe is to share my data with the lenders? So I remember reading about customers being scammed by Chinese lending apps in India during and after the pandemic. And why do you think this keep happening, even though we are all aware of these scams happening across different industries? And how do you think people can avoid falling into these traps?
See, it's very unfortunate that there are bad elements everywhere. It's part of the life. There could be bad elements that hides in different forms in any form of industries, and definitely financial industry is one of the most attacked part of the industries when it comes to bad elements. But at the same time, I would not give all the credits to bad elements. That it's also coupled by people's desire for money.
Like you said,
It's
the
not
aspirational side of the
it's not just aspirational side. It's always, people always get lured by, like, if you say, hey, download this app, you get money. So that's how what happens with most of the people. And the MO or the modus operandi of these people are always that you lure with them with the money. You say, hey, you download the app, give me your PAN card, you get 35,000. That's what happens. So people should be very careful that nobody's going to give you free money. That's the basic understanding. And it's always advised that while sharing data with any apps for that matter, including the largest bank, it should be very clear that you know who you are sharing the data with. RBIs of the world or the banks of the world or the fintechs like us, we keep promoting the thoughts and we keep educating customer about the cyber attacks or the spammings or the frauds that could happen through these apps or fraudsters. But still, customer fall for this trap. So quickly, I just want to share like two important things any lenders should keep, any borrowers should keep in mind, irrespective of what loan they are taking. It could be a smallest loan, as of like you said, you go to Amazon Pay later and buy a packet of salt, to buying a large home of your own. There are two basic things that you should check, and that would help you to avoid a lot of trouble like this. One is that look for the NBFC or the bank that is giving you a loan. So every time, so I mean that's a education series for you too also, because you are always availing Amazon Pay later, but you never knew the bank behind, which is us. So everybody, before a while availing the loan, you should ensure that there is a legit RBA approved bank or an NBFC behind. In case we are the bank and Karur Vaisya Bank is our banker who is behind the Amazon Pay later. So you should be aware about it. The second thing is that irrespective of whatever loan you avail, the moment you avail the loan, the same day or the next day on your registered mobile number or whatever is the contact detail, you should get the letter of the loan with all the details like the interest rate, the tenor, or whatever it is. These are the two important things we should be very careful, and you should ensure that it's part of your any loan journey that you take. If you don't get either of this, like not just one of this, either of this, it's probably a fraud that could be happening with you, and you could immediately go to the nearest RBA ombudsman and let them know about this. So these are the quick, there are a lot of other ways to do it, but quick hacks to ensure that your data is safe and you don't get or fall to trap of in such scenarios.
Thank you, because this has always been a concern for not just for me, for many people. So, Shakti, this is also true that fintechs have begun to change the way borrowers think about lending. And then the pandemic accelerated the push for fully digital lending, and the supporting factors also have been catalyzed by the technology. So, how digital transformation in our country has impacted this space?
So yeah, see, digital transformation is has always been happening in our country. To give you an example, we in back in my back like 10, 15 years ago, while I joined Bajaj like 10 years ago, my manager used to say that there were scenarios where he used to go to say Girias or Chroma. That's a famous Chroma was not there at that point of time. Girias or Pi Internationals of the world, or in case of Kerala, it's Nandilat Gmart of the world, where people would walk in and say he want to buy a fridge and then give all the applications there. He or she might walk in back after 3-4 days to know whether his loan is approved or not. Once the loan is approved, then they will sanction it, and then after 7 days, actually the customer can take the product and go back to the home. And after 5 years, somewhere around 10 years ago, when I joined Bajaj, it moved from 3 days to 3 hours. And then in 5 years later, in 2015, so the world that 3 hours moved to 3 minutes. And today, when we say it's less than 3 seconds, you walk into the store, you just click off a button, you come to know whether you're approved. So digital transformation has been very much an integral part of this journey. But if you see for the last few years, with the current government in place and the kind of the digital infrastructure the NPSE is bringing in, like as simple as things like UPI or the e-mandate setup, the digital repayment setups of the world, there is a lot of catalyst that has happened to this new age fintechs. For example, what we said about having a loan in remote village. A typical banker would have to start having a branch there. Versus today, in today's world, with the kind of technology that we have, you don't even need to see the customer to approve him a loan. You can do the repayment setup through an e-mandate and do a KYC through the digital KYC and get the repayment through a UPI auto collect. So these are the digital stacks or the stuff that the government has made in the last few years that has helped the growth of digital lending like multifold. And a public sector and a private sector can work together and create, large beneficial things for the citizens of the larger economy, for that matter.
So I understand that there are a lot of initiatives that the current government has taken to democratize the digital payment ecosystem. But do you think the new regulatory circulars by the RBI would affect the growth of this industry?
See, any industry for that matter, right? As it starts getting matured or starts getting a larger pie of the economy, it starts to get regulated. It needs to get regulated. And the beauty of getting regulated, or the best part of getting regulated, is that you can weed out the bad players, like we said before. So the more it gets regulated, it's better that there are a lot of better players or players who are compliant in the market. So I don't think it's a bad. It could be a small stopgap for few lenders, definitely, who are not following the guidelines of RBI. It could hinder a small set of players, but on a larger players, to give in my own example, like players like Axio, who's always been compliant on their data perspective, for such players, it's always been a welcoming call, because the moment you have a much compliant things in place, you also know that you are playing by the books, and whenever you play by the books, it's a rule of the nature that you are always bound to win. So I would always see this regulatory aspects of RBI to be a winning gesture, and this will always help us to grow as an economy.
Right. So Shakti, I have a personal question now. So being part of the CAR department, I would be curious to know more about the opportunities for digitally skilled people, and what are the skill set necessary if anyone wants to build a career in this industry.
Sure. So see, again, fintech is an industry that has been grown with the marriage of evergreen financial service industry that I told before, and the new age millennial technological industry that we spoke about. So the fintech industry, again, has been very disruptive right from the start, and it succeeded in redefining various ownership-based traditional financial services. Right. So one of the key things what fintech has done is that it replaced the normal democratic model of financial underwriting, and it is brought up a lot of data or technology brought into it through this multiple streams of digital digital lending in space. So from a management graduate perspective, because it's a very wide spectrum, so let me not go into a larger problem like DevOps or a system development engineer, things like that. That's a very broader thing. Let me comprise it to very
data analytics.
From a management perspective, let me put this into very quick 3 buckets. So the most interesting job profile in this space, that's one is called the product management role. Second is the growth role, and the third is the underwriting or the risk management role. Yeah. So when it comes to the product role, any great fintech companies is built because of great products that they have in the background. Like I say, again, I like to propagate my company. Like the Amazon Pay Later is a great product that we have developed, or Cred that you might have seen is a great product. So any great product or a lending company is great because of the great products that they have. And the great product is always developed by a product manager. So for any aspiring individuals from a management perspective, if he or she needs to pursue a career in the fintech space, product management is one of the brightest place to be. Why? Because it is not just the product management that we learn in the books in the MBA programs. It's much beyond that. It's he or she is the neural system for the entire organization. They should talk with the partners, should talk with the tech team, should with the finance team, should talk with the sales team, and they're like the core team in between. So to get the skills out of it, over and above the MBA courses that we have, I would recommend students to have, there are a lot of online resources and, bite-sized modules available on internet, free of course. You don't even have to spend money on that to understand and read more about it. So that's a very powerful skill to have in the current scenario. Second one is definitely the growth, which is my part of the system, which is more like, growth is anything that, brings in revenue. So growth again could be business development or a partnership or, propagating a product. So that's the ecosystem. So again, the kind of things what you learn in the normal business development is something which you could be using in this state. Over and above that, they could also learn or read more about how partnerships work, how B2B partnerships or how to B2B2C partnerships work. And again, a lot of resources available online regarding this. And the most the I'll not say important, everything is equally important, but something which is a little different from a management. But if people are very keen with numbers from a finance background, risk management or underwriting is one of the keys, very hot jobs that there is in the market. So this is more for people who have a flavor of liking to work with numbers, who like to do a lot with analytics, like what I've quoting before, right? Like you cannot have a person looking into the paper, hey, Gopi is having XYZ salary, so let him give him a loan. So that's not how it's going to work anymore. We have got millions and millions of customers coming in. So it's a AI or ML model that goes behind. So people who want to work there or who want to build a career, that's a very interesting opportunity that it's there in the place. So I think people who are interested should definitely double click on analytics courses that they have. Obviously, all the 5 campuses of Amrita already start offering electives on analytics. I would pursue everybody who's on this call to definitely go for it. If you have affinity towards number, if you like to crunch numbers, if you like to deep down on problems, that's a good place to have it. So again, it's very comprehensive, Gopi, so I really don't want to go deep into that, but these are the key 3 areas I believe students or aspirants can go into.
So thank you, Shakti. So I think we have now exceeded the time for the discussion. So now we can, this is the time for the Q&A sessions. Like if anybody wants to ask any questions, you can post your queries and directly it will come to us so we can address them. So do you see any questions? I cannot see any questions here.
No, should I read out? I mean, I can't. I don't have an access to the question. If you have, you can read it out. In other ways,
no, I don't have any questions, so I'm just waiting. So
that's okay. I mean, I think it could have been a very brief discussion, so people would have got the gist of it, or maybe we can wait for a minute, maybe, or
yeah, maybe we could just wait for a minute, like if in case they want to ask any questions. So Shakti, I don't think there are any questions coming.
Oh, great, wonderful. So,
so
yeah, so it's been very interactive. Thanks for being a wonderful host, Gopi.
Thank you, Shakti. So thank you, everyone. I want to extend my generous thanks to Shakti. Shakti, we appreciate you finding time from your busy schedules to participate in this event. And I thank the entire team of Directorate of Admissions, and I also thank the faculty members, Dr. Avinash Das and Dr. Suresh for your support and inspiration at every point of this event. And thanks to everyone who joined us online this evening, and have a great evening, everyone.
Okay, thank you. Thank you so much, Ruby. And thanks all again. Good to see you.